Hello traders, you're welcome back to the Forex Geek channel. In this video, we are just going to be talking about a clean and effective indices trading strategy that you can apply across the Nasdaq, S&P 500 and Dow Jones. Okay, now let's just get straight into the setup. This strategy focuses on using market structure, support and resistance, and basic confirmation tools to create high probability trades. Okay, it works for both day trading and swing trading. Okay, depending on your time frame and style. All right, now the first step with using the strategy is to identify market structure. It is very important to identify market structure. You need to understand the prevailing momentum in the market, right? It's very crucial, all right? So you can actually decide to start from, depending on your trading style, whether you're a scalper, day trader, swing trader, okay? It's going to determine the time frame you're going to be working on, all right? But you can decide to start on the 1 hour chart though. Your first task is to identify whether the market is trending or ranging. That's your first task. That's the first thing you have to do. All right. So now we have seen that price is trending downwards, but it's facing a support zone. It's facing rejection around this level. All right. But currently, price is trending downwards. Okay. So basically, in an uptrend, you look for higher highs and higher lows. And in a downtrend, you'll be looking for lower highs and lower lows. All right. Use a basic trend line to visually track the direction. If the market is consolidating, either wait for a breakout or a drop down to a lower time frame. You can wait for a breakout. You can just drop down to a lower time frame like the 15 minutes for short-term opportunities. All right. Now, the next step is to mark your key levels. You draw your support and resistance zones from previous highs and lows. All right. Mark those key zones on your chart. Okay. Now we can see that some of these zones are being respected in the future, right? When future price activity took place, you can see that these zones were being respected. So you look at where price has reacted multiple times. These are the areas where traders make decisions. Once you have your levels, you switch to the 15-minute time frame for day trading setups. For swing trades, you can stay on the 1 hour or even the 4-hour chart. All right. Now, you have to wait for price to reach a key zone. You don't want to take trades in the middle of nowhere. Okay, let price return to one of your marked zones. Be patient. Once it reaches a key level, that's when you start looking for confirmation. Okay, for example, you can see that as price was in this downtrend and it came down to this level, it came up back and got rejected around this level. So in this case, we're looking for bearish confirmation patterns. When you get a bearish confirmation patterns, go ahead to enter a sell trade. Stop loss above the swing high, recent swing high. Take profit can be around key levels. You can use good risk to reward ratio, like 1:2. Okay, but make sure you always get confirmations from indicators as well. For example, you can add the 14-period RSI to the chart. Okay, or you can even decide to use MACD as well, whichever one you prefer. Okay, for a long entry, if you're in a bullish trend, right? If you're in a bullish trend and you were looking for buy entries, okay, you want to look out for the RSI bouncing from the 40 to 50 level, from the 40 to 50 level, or if you are using the MACD, right, you can be looking out for MACD crossing above the zero level, showing bullish momentum. Then for a short entry in a bearish trend, look for the RSI rejecting the 50 to 60 zone or a bearish MACD crossover. All right, you look out for a bearish MACD crossover, or look out for the RSI being rejected from the 50 to 60 zone. Okay, also make sure that you look out for candlestick patterns like pin bars, engulfing candles, or inside bars at your zone. So for example, in this sell trend, we can see that price got rejected from this trend line. Okay, initially it got rejected from this resistance and it came down all the way to this point, broke through this, and then it got rejected at this trend line support, and it climbed back to this trend line resistance, and now it's getting rejected again. So in this case, look for bearish candlestick patterns. Watch out for the RSI rejecting the 50 to 60 levels and the MACD dropping below the zero level. Once you get confirmation, you can enter a sell, stop loss above the recent swing high. Take profit can be around key support levels, or you can use a fixed risk to reward ratio. All right. Remember that your stop loss should be just beyond the zone. If it is a buy trade, stop loss should be below the recent swing low. All right. It's a sell trade above the recent swing high. You can use a fixed risk to reward ratio like 1:2 or 1:3, or you can target the next key level. All right. If you are day trading, manage your trade actively during peak hours like the New York Open. Okay. And then for swing trades, hold your position as long as market structure supports your direction. For example, let's say you had caught a sell trade on time and maybe you entered around here after you got your confirmations. If you are a swing trader, right, and market structure holds, maybe you continually see lower highs and lower lows. So long as that structure holds, you can just remain in your swing trade until you have a change of character. All right, you can remain in your swing trade until when price finally stops giving lower highs and lower lows and maybe starts giving higher highs. Maybe once a higher high forms, giving you a change of character, you can exit your sell trade. Okay, that's just an example. All right, so whether you are day trading or swing trading, so long as the market structure holds, you can remain in that trade until the structure has been broken. All right, so this indices trading strategy works because it combines structure, discipline, and clean setups. It keeps your chart simple, your decision making logical, and your risk tight. So whether you are trading Nasdaq or S&P 500 or US 30, these rules apply. Adjust your lot size, time frame, and style, but always stick to the core strategy. If this helped simplify your trading, hit that like button and subscribe for more high-level trading content like this. Turn on notifications so you never miss a strategy drop. And let me know in the comments which index you'd like to see this strategy applied to live. In the meantime, thank you for watching. Trade safe and see you in the next video.